Lovely to be with you today. As you can tell by my accent, I'm not from around here, but I'm delighted to have popped over the pond to talk about web revenue. That was a great talk because one of the biggest growth levers we see across our customer base is consumer apps that are now driving up their average revenue per account, average revenue per user, by adding on that B2B channel, adding on that B2B sell. As you get to scale, 20, 30, 40 million ARR, it's really hard to keep that top line growth rate going unless you're also able to drive up average order size. So it's really, really critical. I know Phil Carter's speaking in another room at the moment, but he's does some great content around this as well on the frameworks for how you build a B2B offering for consumer. Really aligns with what we just heard. Anyway, let's move on. So we're going to be talking a little bit about app monetization, specifically on web today. And there are a few things here that I'm going to call out at the beginning, despite what the talk kind of title says. This isn't new. So first kind of thing that lots of people are talking about it right now a lot, but it's not new. Secondly, it's not just about the Apple fee and trying to avoid it. And thirdly, it's not just about checkout conversion. We're going to unpack each of those three things. So just as a very quick intro, my name's Andrew. I've been serving Paddle now for 4 years. Previously, I was a co-founder of a software business that got acquired back in 2019, ended up running global marketing for Optimizely, and then came to Paddle after I'd finished my earn-out there. And Paddle's a business that's been around for 11 years now, and we serve 6,000 different software companies, digital product companies, doing a pretty significant run rate, global sales, helping them take compliant, frictionless web payments. And probably about 30% of that volume right now is consumer subscription apps that are taking payments on the web. It's our fastest growing segment. It's gone from very little 2 years ago to 30% of our entire gross merchandisable value over the last 2 years. And we're going to talk a little bit about why and how they judge it and how they do that. You can see a few logos on the board here of some of the companies we work with. People like GoodNotes and Runner, that's now part of Strava, as well as big app portfolios like HubX and Codeway. So yes, the app landscape has shifted, but this has been a long time coming. And let's face it, the biggest app companies have already built out big web channels and did it years and years ago. If we think about this timeline, and this is definitely not not to scale, although it is chronologically correct, the cross-platform apps started building up this web revenue volume for good reasons, mostly about revenue diversification many years ago. But our founder actually testified in that epic court case over in San Francisco as an expert witness about how you can build a payment system that's outside of Apple's ecosystem or Google's ecosystem, and how you can do it compliantly. And so we've been kind of on the conversation about this in the courts for quite a while, only on the basis of wanting developers to have freedom, wanting app companies to be able to monetize where they want to. And we really believe that this is here to stay. We've seen these rulings go through, and frankly, the uptick in web revenue we see coming from two key things: ruling and tooling. The rulings are giving a really big spotlight onto the fact that people can generate money outside of the walled gardens. And number two, the tooling that has been built, and there's many people in the room, in the room outside, who are building toolings to help you do web funnels, building tools to help you measure that revenue, have a single sort of source of truth, many of which we partner with. I'm not going to dive into kind of the specifics of the rulings. Very happy to chat to you about those at the stand if you'd like to later. But suffice to say, you are now able to take revenue outside of the App Store. You're able to do that in a way that means you don't have to pay those Apple fees. And there's certain guidance that the courts have given Apple over what they are not allowed to do in terms of impinging that user experience. And there's a bunch of different rules that are pretty complicated in the EU. We're not going to dive into those, otherwise everyone will feel as sleepy as I do with my jet lag. But again, very happy to talk over lunch if you'd like to. So some of the biggest apps in the world have raced to take advantage of some of these new opportunities. And it's been really fun to see kind of the uptick we've seen in our base. As I said, it's gone from a very, very small percentage of our volume to about 30% of our overall processing is now consumer apps that are taking payments on the web. And these web flows you can build in a really compelling way that looks pretty native. But as I said, we said, firstly, it's not new. Secondly, it's not just about the Apple fee. And thirdly, it's not just about judging on checkout conversion. So let's start out with this first one. I think the misnomer is that everyone sees the 30% that they pay and wants to try and avoid it. And that's often a starting point for the conversation. And frankly, it's not been one of the biggest drivers in many of the businesses that we serve. I know that might sound odd because it's a huge portion of your revenue that's going to someone, but there's a bunch of other reasons. The ability to experiment really, really fast and build lots of new funnels and try new things. The ability in your meta-targeting or whatever platform you're using to now address much bigger audiences because now it's not just mobile buyers you're addressing. The ability to offer more complex billing models. The ability to offer some really interesting cancellation flows. We'll talk about that in a minute. More control over that customer and better data and attribution. There are companies that do this specifically because they find certain portions of their user base, segments of the user base, actually perform better conversion-wise on web than Apple, even though we all know how high converting an Apple payment is. So there's a bunch of reasons there why, and it's not just about that 30% fee. And if we just break this down, there's all kinds of people talking about app to web and web to app, and I get a bit stumbly over all these random words we choose to define. I think generally we, as an industry, have an overcomplicated way of describing most things in life. But if we just think about this really, really simply, the middle flow you see there is what we've all been doing for years. There's an ad or there's some form of promotion. You go to the App Store, you install it, and then you use it. And two things have opened up. Let's look at the bottom flow first. This is where you are now running ads out on the web, and there is a web landing page. And it might not just be a funnel, it might be a range of different things you're offering there in order to understand that user, convert them, and then they are going to see a paywall, they're going to see a web checkout, and then after that, they'll go straight into the app to use it. And then finally, we've seen the third option, which people in their wisdom are calling app to web, which is where there's the same normal promotion or user journey that's happening, but at the point of transaction, and this is what that last Apple ruling was all about, or specifically about, you're able then, instead of seeing the transaction processed in Apple, you're able just to pop up a web browser and then actually convert that outside and therefore pay the fee to a web processor rather than to Apple, which is very different. So those are those three flows, and definitely we are seeing most of the volume on that bottom flow, people who are now aggressively making sure they spend more of their user acquisition budget on web, running people through a web funnel, and then making sure that they only pay the 4%, 5%, 6% rather than the 30%. But we are seeing an increased number of people, particularly in Europe. It feels like in America, there's probably a little bit more concern over Apple's dominance in the ecosystem or what might happen, and people want to see it play out a few more times first. But we had our first customer last week, I think, who came and wanted to immediately turn 100% of their volume from Apple to a third-party payment method, to Paddle, when they get to that point. Really interesting. So if we break that down, yes, there's the transaction fee, customer relationship, better attribution, audience expansion, really interesting one, improved cash flow, you actually get your money back faster. That's really important. If you're an early stage app, or if you're spending a lot on user acquisition, given your working capital, the working capital cycle can transform your business. Because right now, if all of that user acquisition is spent, and you only get the money back after they've gone through not only the subscription or maybe the free trial and then the payment, but also then it's held up in Apple for another 30, 60 days, it can be a really long cycle before you're able to spend that again on more user acquisition. Whereas if you're doing this on the web, that cycle becomes extremely fast. And you can now turn that back into more user acquisition every week or every month or however fast you want to do it. So yeah, really interesting to think about that portion of it. And some of the fastest growing consumer apps we've seen are using this just to speed up their working capital without needing to go and find a third-party funding provider to help them do that. So this was this web to app flow, the bottom one. And then if we take app to web, it has some of the same benefits, but importantly, the attribution and the audience expansion isn't a benefit because you're not doing that targeting off on the web. And we're not going to dive into this for time, but it's important to note that although many of the providers out there are building these very long funnels, and there's really good reasons for that. Once you've walked someone through that funnel, firstly, you're getting some really good data for retargeting on those first few questions. But secondly, once you've walked them through that on web, then they're much higher converting when they get to the end of it. But there are other ways you can be doing this too. It could just be a very simple web payment link. There might be some form of content funnel. We've seen web stores, we've seen waiting lists. There's multiple ways you can use that web channel other than just a web funnel. So we all want to see some data, and we're still gathering it. I know people across the industry are still gathering it. Revenue Cat have published a little bit. I know our friends at Superwall have spoken about this a little bit too. I know Adapt, Funnel Fox have spoken about this. We're all trying to get more data, and it's really important to understand that we are so early right now, and there's a couple of things I'd call out. The first one is that I fully believe, and certainly the companies we're working with believe, that yes, it might be true that on first checkout, there'll be a ding because people are so used to paying Apple in the way they do through IAP. But actually, that delta is going to close as more people experience these type of web payments and as people understand best practice. So the delta there is going to close over time. And it's really, really important we don't judge these things just on that initial checkout conversion. So we'll dig into that a little bit more. I've got a bunch of data here. I'm actually going to flick through these slides, and we can talk through them at the booth if anyone wants to dive into some of this, because we've got a bit more updated content that wasn't in here. But this is, if we just look at a couple of the data points here, what we can see, firstly, I think this is some amalgamated data from some Superwall customers. There's one individual named customer of ours there, Stoic, and then there's an unnamed customer there, a fitness app. But what we can often see is the initial web conversion has a ding or is reasonably similar. But then when you take out the Apple fee, you usually see some benefit, obviously, because you've got a 30% fee you're not paying. And then it's really important to go through and look at the final bit of retention, because that's often where your LTV gain comes from. Because on web, two things almost always hold true. Involuntary churn is less and voluntary churn is less. And so once you've got someone through a web subscription, then often the LTV is better. So we have started building up a reasonably complicated web revenue calculator that I'm very happy to share with people, and I know our team will be able to walk through with you. So we can look at your case and from a bunch of different inputs, work out, do we think this is going to be net positive? And if so, what would have to be true for that to be the case? And we're very happy to share this around afterwards, because it's really important, again, not just to look at the 30% fee, not just to look at the checkout conversion, but to think about that entire onboarding flow. Because if you just optimize the checkout, you could be losing in multiple other places. So one of the frameworks that we're using with a couple of our customers, which is proving really interesting, and this is just indicative data here, is thinking about those moments that matter through that entire funnel. One of the things I love about consumer app founders and consumer app teams is they are absurdly data-driven. I come from a B2B background previously, and the amount of data we saw, often it was anecdotes rather than data, because we were big sales-led deals. And I love the fact that in this space, there is so much richness. And so our real encouragement is to try it and to experiment and to watch these numbers and to make sure you're measuring at every one of these points, not just at that first one, so you can calculate that true LTV that comes off the back. Cool. If we just start thinking now about where this sits and solving the whole problem, we've got a few slides here that are just some of the best practice we've seen over the last year of operating these funnels. Now, we're integrated into many people in the ecosystem, like I said, Revenue Cat and Adapt, Funnel Fox, and Onboarding Online, Web to Wave, Superwall, etc. And every one of these providers, there's different parts of the stack that they do. But the things that hold true for us in every example that's working well is, number one, thinking really carefully about that user experience, trying to match the web user experience as closely as possible to that in-app experience, and making sure that your payment methods are as relevant as possible, as native as possible. So making sure, obviously, you've got Apple Pay and Google Pay on offer ready for people to use. So we really want to make sure this is frictionless, this is familiar, and this is as fast as possible. So secondly, is thinking about pricing, making it really transparent as to what your prices are, but then also thinking, when you go to web, if you're just using a PSP like a Stripe, it's very, very easy to just offer that dollar price and you can get live very fast. But building out a stack that enables you to have the right payment methods in every region, showing the right currency in every region, let alone all the tax compliance and other things. But just in terms of that checkout, making sure that it is relevant and localized becomes more complicated. And so that's one of the things we see really correlates with a high converting experience when you've got an international traffic, when you've got an international audience. And then finally, really thinking about this downgrade and cancellation options. This is one of the areas that we've seen huge gains. And I don't think I have a slide on this, but I know we've got a published case study. Codeway, which is a big app portfolio based out of Europe, they saved $500,000 of would-be cancellations by moving subscribers onto web and then running cancellation flows. Another of our big customers showed us that 65% of people who tried to cancel chose not to cancel when they were presented with a range of other options. Do you want to pause the plan? Do you want to downgrade to something? Whatever it might be. And there's a whole bunch of tooling we've built into Paddle, which enables you to run those seamlessly. That means you're going to save cash, save money immediately. And that's part of that LTV expansion that we talked about. So frictionless, familiar, fast. Make sure you've got these things built into that process, not just on that initial checkout, but making sure you're optimizing for the long run. And then, of course, choose the right tools. And there's loads of vendors here that you can talk to about this. Many people are building in-house. Some people are just building it on Typeform and going from there. It doesn't really matter what you're building on. I mean, I'm sure it does. But the really key thing here is to make sure you're optimizing this entire flow and you're thinking about it end to end. There's a whole landscape. You can talk to a whole bunch of people in this room and in the room next door about parts of this funnel that you can use. And the one bit just before we finish that I think is really important is someone described recently as Paddle to me as it's like web processing for grown-ups, which is interesting because the thing is we're in a very Stripe-dominated world over in the US. It's one of the absolute darlings of Silicon Valley, of Y Combinator. The Collison brothers have done an amazing job to build an amazing company, and they're part of our stack, right? We use Stripe, we're friends of Stripe, we're a big customer of Stripe, but we also use lots of other payment providers. And the key thing here is it's very easy to get going, but you instantly face complexity because you have relied in the past on Apple to solve a huge range of things for you, from sales tax in every region you're selling, from managing lots of different currencies, to a lot of reporting work, to fraud prevention, to thinking about chargebacks and refunds, to your buyer support. There's lots of things that Apple handled for you, where if you just throw up a Stripe checkout and do this, it's really quick to get going, but you need to think about what happens when you succeed. And so that's one of the reasons that we really encourage you thinking about a merchant of record, which is what Paddle is. There's a few other merchant of records out there as well, which is where all of this is bundled into one solution. So effectively, it's a metaphor for the App Store that with one provider, you have all of that, can be compliant, can be efficient, everywhere in the world, and sell at scale immediately. So really encourage you to think about that because our second time win rate tends to be really, really strong because we paint the picture of these problems, these fees, these fines that might come. And then 9 months later, when someone hasn't got them built for that, they have to come and go and replace. Cool. So we're going to finish there because we're almost out of time. My real encouragement, though, is we are seeing this adopted across the majority of apps we work with from probably a 5 million ARR revenue level upwards. Although what's really interesting if you look at the Turkish and Cypriot ecosystems where some of the biggest kind of innovation is going on right now, there's some government incentives there. There's a real interesting meeting of East meets West with all the Russian, Ukrainian diaspora that are there, as well as Western capital. Many of them are starting first with a web checkout. And they're not even trying to process with Apple for their first dollar, which I think is very, very interesting. This is one of the very few trends that is going from east to west. We are usually recipients of your innovation coming from west to east. And this is one of those very few trends that is very clearly going the other way and is aggressively adopted out of the big European app ecosystem. So think about that as you're building, experiment. And as Miranda, one of our wonderful customers at Runner, they're now part of Strava, has laid out, they've got a really interesting business case they've seen from this and have just ramped their web volume because of those three things: higher start rates, conversion rates, and higher retention. So that's it for me now. I want to be respectful of everyone's time. I know we've got lunch and stuff coming up as well. I'd love to chat to you. I'm around for the rest of the day. Our team are based here as well as in Europe. And if you've got an app that you think you might be able to get some clicks of margin by trying web revenue, we'd love to introduce you to one of the partners that can help with that, as well as help process that for you. We've got a team that are building this out every single day for apps across the US as well as across the rest of the world. And we want to help make you a bit more margin so you can grow faster. Thank you so much.